Good morning, it's Wednesday, January 6th, and here's today's finance breakdown. With Georgia Senate votes being counted, yesterday saw all U.S. indexes in the green, led again by the Russell 2000's 1.97% increase. Futures this morning are not as optimistic, the Nasdaq down 1.33%, since a Democratic victory could usher in more fiscal stimulus and higher corporate taxes and regulation. ISM released a spectacular 60.7 manufacturing PMI for December. That's a 2.5-year record high, pushing manufacturing employment into an expansionary 51.5 from November's 48.4. At the moment, we can see that the bearish channel on the dollar index is still in place with a 20-hour moving average in complete agreement. At noon GMT, we'll be seeing mortgage data with service PMIs at 2:45. Finally, at 7, the FOMC's meeting minutes from its December meeting. Yesterday saw a bevy of members saying that the Federal Reserve has no intention of increasing asset purchases for a while, with Chicago's Charles Evans predicting interest rates will remain low for years. Most European indices yesterday lost some steam to the tune of about 0.5%. Again, the FTSE plowed ahead with a 0.2% increase despite another 1.8% contraction in BRC shop prices, while Reuters is reporting a 30% drop in 2020 car sales, which is an 80-year record low. The euro, as we can see, is rising on dollar weakness, and for now there doesn't seem to be any reason for that to change. Ahead this morning, we'll be seeing service and composite PMIs for most of Europe, and expectations are for a flat repeat of last month's data. Chinese benchmarks were mixed this morning. The Shanghai Composite up, the Shenzhen down, Hang Seng up, and the Nikkei down for a second day in a row, despite a weakening yen. Japan released its December service PMI overnight, showing a contractionary 47.7 in December. Actually, that's a half point better than expected, but a tick lower than last month. And consumer confidence in Japan in December dropped another 2 points to a measly 31.8. China's figure for the same period is showing the same 0.5% drop, but at 56.3 was still expanding. At midnight GMT, Australia will be releasing construction data alongside its trade balance, and once again, we can see that the technicals for now are quite bullish. Bitcoin continues up, breaking through the 35K mark this morning, while oil made a spectacular recovery after double bottoming at 47.35. It's now just above the 50 mark and settling in for the ride after yesterday's API report showed a better than expected 1.6 million barrel withdrawal. Saudi Arabia helped matters by promising to cut output despite OPEC Plus's inability to agree on lower quotas across the board. At 3:30 this afternoon, we'll be getting the EIA's numbers, which also expect a considerable reduction in inventories. Meanwhile, pay attention to that pennant up top of the chart and an RSI that just could be turning bearish. On the corporate front, the Italian government is rewarding yesterday's shareholder approval of the FCA Peugeot merger with hints that it may invest in the new entity. And Alibaba is planning a $5 billion bond issue in the U.S. this month. That's despite regulatory mayhem in China and founder Jack Ma's 2-month disappearance. And finally, Macy shares rose by 2.7% after the retailer announced it would be closing 45 stores by mid-year. Still, that should be taken into context, and they don't seem to be breaking that 11.6 level resistance. That's it for today. We'll be back with another breakdown tomorrow. Stay with us.